name is Garrett Sutton, and we're going to be talking about asset protection. This is what you need to know as you build your businesses, invest in real estate. As you grow your assets, you need to protect them at the same time. Let's look at these entities real quick and understand the differences. So we have the corporation. We'll just put it as abbreviated as Corp. We have the LLC, and we have the LP, the limited partnership. And this can be an S or a C, all right? And that just relates to taxation. For businesses, a lot of people will use the corporation. In some states, you can't operate through an LLC. In California, there's certain restrictions on those who are professionally licensed. You can't operate through an LLC. If you're going to go public, you're going to have 400 shareholders. You need to be able to have people invest in and out of the stock. The LLC really doesn't work well for that. There are restrictions on ownership, which is a good thing, but when you're going to go public, you're going to want to use a corporation. Now, the reason you would use a C Corp instead of an S Corp, the S Corp can only have 100 shareholders. And to go public, you need at least 400 people or more. So the S Corp is good for the smaller business. We really like the S Corp taxation, which we'll talk about in a second. But the C Corp would be your choice for going public. As well, if healthcare is an issue for you, if you need to pay those healthcare premiums, the C Corp allows you to write those off as a business expense. And so you can use that as an expense of the corporation and not pay it yourself. With the S Corp, the LLC, or the LP, if you own more than 2% of the company, which you will, if you own more than 2% of the company, the entity, the corporation or LLC, can pay the healthcare premiums, but that payment comes back onto your tax return as income. Meaning it's an expense to the company, but it also shows up on your return as income. The S corporation, while it can pay that, it can pay that expense of healthcare. It's going to that benefit that you received is going to show up on your personal return and be taxed. So if healthcare is the issue, the C Corp is a good way to go. The LLC we really like for real estate. The LLC and the LP offer great asset protection, and the LLC, if it's taxed as a partnership, you don't have those darn payroll taxes to pay. If it's a real estate entity, the same with the LP. The corporation, if it's a trade or business, you're going to be paying payroll taxes on your salary income. And if you own the business, that's 15.3%. It's the 7.65% that you contribute as an employee and the same amount that you contribute as the employer. So if you own the business and run the business, that's 15.3%. So we would like to minimize payroll taxes, especially since if you're a younger person, there's a very good chance you're not going to see that money. Because in the statements they send you, they say we're bankrupt. I think that's a way for them to look for higher revenue, but they do admit that the system is going to be bankrupt very shortly. So to minimize payroll taxes is a good thing. You got to pay a certain amount of them, but let's not pay payroll taxes on every dollar of income. So if you have an LLC that operates a business, all the monies flowing through the LLC under current IRS regulations are subject to those darn payroll taxes. We'd rather save on that. So if we have the LLC taxed as an S Corp, you can minimize your payroll taxes. For example, you have $100,000 of income, and a reasonable salary for someone to run this business would be $60,000. 15.3% is paid on the $60,000. But on the $40,000 in profit, you can take as a distribution. You'll pay ordinary income on that, but you won't pay the 15.3% in payroll taxes. And so that can save you 15.3% of $40,000. That to me is somewhere over $6,000 a year. So we can save $6,000 a year by structuring this properly. And you'll work with your advisors. You want to have a team of advisors that will help you structure this properly. Now, the LLC that owns real estate, that's not a trade or business. If it's a passive holding entity, the money flows through and you don't owe the payroll taxes. You'll owe taxes. You can shelter that with depreciation, and that can be a very good way to build your estate and pay less in taxes. But the business that wants to operate as an LLC, but is operating a business, many of my clients have the LLC taxed as the S Corp. Now, why doesn't the corporation offer the great asset protection like an LLC? And that has to do with the charging order, which is not available to corporations except in one state. There's one state I mentioned that provides charging order protection for corporate shares. Meaning if you get sued as an individual, someone trying to reach the corporation's assets has to go through the charging order procedure just like they do with an LLC or an LP. In that scenario, by using the state of Nevada, it's the only state so far that provides charging order protection for corporate shares. By using a Nevada corporation, you are much better protected. And we've had a number of clients in New York and other states that don't have the charging order that have taken their New York company, merged with a new Nevada company, and then they bring the Nevada corporation back to New York to do business. And by doing that, you have the charging order protection baked into the cake. A lot of our clients, when they're starting new corporations, if they have to be a corporation, they will set up in Nevada and then qualify or register with the local home state to do business in their home state. So it's important to realize that we have asset protection via the charging order for Nevada corporations, but the other 49 states don't have that protection. I'm often asked what resources are available to people starting a business or investing in real estate, and we offer quite a few. I would encourage you to go to the corporatedirect.com website. That's corporatedirect.com. We have a lot of articles there, a lot of resources you can access. As well, you can sign up for the newsletter, and we're keeping you informed. All of our clients are kept informed about key changes in asset protection law. So we want to make sure you're up to date on what you should be doing to protect yourself. And so go to Corporate Direct, look at the site, sign up for the newsletter, and I guarantee you'll get some great information.